Good morning, MMT. 10:48 a.m. Pacific Standard Time, 10/27/2013. We have Netflix before us. We went through the earnings season last week. We have every live video to show it, live analysis before it happened, how overbought it got, and what a train wreck that was for the bull. And that buying the put options made a lot of money before the fact, and Mr. Icon sold half of his shares. There's a whole lot of stuff that went into it. It doesn't matter. What matters is that print went straight down from this very overbought name that we have covered several times in the past. Please feel free to go to the home page. Here you'll find by calendar date lots of trades that were done on Netflix. On a 15-minute level, on an opening bell level, there's one. There's lots of different trades. Here's another one. So go through here, and you can also click on the arrow here, and it'll take you, you know how these work. They take you all the way over here. You'll find lots of trades in here and different analysis. You'll get to be part of that live. Click the arrow back, and it'll take you back, and you'll be able to see other plays and other things. MasterCard, we're doing analysis, Amazon live trade. So there's lots of things that you can do. Find all the trades on Netflix and move forward. Not only that, if you go to the trading tab, click on free trial. The minute that you click on the trading seminar, get started, it's all here. Click the button, get started today. That's all you got to do. Back to the weekly analysis on Netflix, and we were trading the calls and the puts, and there was a lot of trading action. On this very day right here, the actual money flow was $67 from the top down to that bottom. Sell gap. How do I do that? How do I identify that? How do I do that during an earnings season? All of these things that you want to ask yourself. Well, put that behind you. It'll be done for you. Let's talk about why we want to buy calls on Netflix after our big sell down. It would behoove you to do the following. Go to the Services tab. Scroll down to HFT Trading Courses. Please click on it. You need to learn as much about this as you possibly can. Right now, here and now. Look, all you have to do is click on the Ghost Exchange trailer, right like this, right here. You click on it, and it's going to take you to iTunes, Ghost Exchange. We're in this movie. It has a lot to deal with high-frequency algorithms. Our platform is based on what you will see in this movie, the mechanics of it, and the way that we do business with markets. Let's not forget the SMF Options Exchange. Let's not forget the SMF Stock Exchange. Listen, you don't have to have any experience in any of it. All you have to do now is take the next step and get in the free 5-day trial. First, call me. The telephone number is here. Once you call me and we have a talk, the telephone number is 702 area code 685-0772. Open an account page. Please visit Open an Account. Click on the button, Open an Account, and we'll take you where you need to go. Watch the live videos. There's lots of things that you can benefit from. All you have to do now is get involved. Read what's on the page. Write down all your questions and we'll answer them. When you get in contact with us, we'll be happy to do that. Not only that, learn about what the pattern day trading rule is and how that affects you, how that handicaps you to the marketplace, how direct access software with the routing engines working for you to get you the best feel in your orders is everything to you and a whole lot more as far as routing your orders. The next thing is getting that trading capital and having that platform. That's going to make a change, and in you it will make a change. because you can overcome all of the obstacles by simply opening an account tab now. Netflix has got a great setup at the 10-day simple moving average. I can tell you that right now. That's 329.95, and it's struggling with it on a daily level. Now, it's been a high flyer all year. It's made a lot of money on the call side of the market. It's made a lot of money on the put side too. The thing that we want to talk about moving forward is what strike prices do we want to buy? It's all about buying wholesale the option. So we know that the 20-day moving average is down here at exactly 321.34, 321.34. Having said that, new MMTs that's the red line right here. So when this price was to drop down here and test that price, we would be looking at the 320 call. Netflix 320 call chart, November regular. Let me just point out the highs. And behind us is a daily chart of Netflix we already know. The high of the contract was 71.45 on 10/22. You can see what happened to the 320 calls that were deep in the money on the earnings announcement. It went straight down and took all of the bulls' money away. Why? Because it was inflated. It was inflated and there was a lot of high risk in Netflix. And even the company CEO had made a statement on the broader television networks talking about they had concerns that customers were driving their prices up. Well, if you go to stockmarketfunding.com, there have been plenty of times that we bought put options and made money and shorted the stock and made money and going long. And right now, what we're going to show you is that this call option, the 320 call, is down here at 1826. If we trade down to test the 20-day simple moving average, we would hope to pick these up between $10.50 and $11.50 below the market. And today's calendar date is 10:58 a.m., 10/27/2000, calendar 13. And Netflix is at that 10-day simple moving average, and the momentum, price momentum, to the bull side has been knocked out. But it's trying to recover right now, and we can understand that. And that's where we're talking about how to trade these calls. Because, see, when you go back and take a look at the calls over here, that the low at that time was 10.55, and we're talking about buying them lower than that. Who cares about what the prices were? What we're saying is the following. It's very important, MMT. New people that are in our new division, when you come down and you drop $7 in price, that means that this call value, that 320 November regular, is going to drop down to a wholesale bid. That's where we're going to make the transaction on 30 contracts. If I'm buying 30 contracts, $7 below the market, I'm saving $21,000 in capital risk entry, meaning that $21,000 of price volatility is out of the way. I'm at the bottom as a market maker making that transaction for us, and most importantly for you, so that you can benefit. And in order to do that, here's what you have to do now. Very simple task on your part. Click on the SMF Options Exchange. That's all you have to do. The market makers are in charge of the price. You're going to get trading capital up to 15 to 1 on equities. We give you capital on options. We do lots of things. Take advantage of it. Put the money to work for you with the live market maker entry and exits, so that only you can take advantage. Open an account. Go to the page. Fill out the paperwork. All your agreements are in here in the right signature form. So one of the things that we want to do is point out where those call options are, and by the price dropping down to support level, how much more premium is taken out of this 320 call, which would give you that wholesale entry and a whole lot less dollar capital risk to entry than any other time. The chart, this is a call chart. Most people don't even know how to use them or interpret them or read them. We'll do all that. We know where the prices should be. Let us do the work for you. Let's do the following. Let's just take a look at that 10-day simple moving average with the trend line right here. I'm just letting you know where that top was. So, having said that, we're going to go right here, MMTs, and we're going to put a trend line right there, which is the high that's where that gap was. This is where it was on earnings, where we came down. So we got that support level down in here. We know that. Now, there is a 40-day simple moving average at 311.77 cents that could come into play as well. That would mean one thing. We would have to break that support level down here. Boom, we'd have to go right through the 20-day. However, there are other support levels. The thing about it is the following. Is how do I trade the November regular 320 call, getting a wholesale entry and walking away with a lot of big money on that trade? And 30 contracts for $7 is potentially $21,000. So if they take $7 premium on the way down of that call that was in here, the 320, when this drops down to these lower levels, that's how we steal that price. Now, once again, we can clearly see where Netflix was on fire on this weekly chart forever. And everyone was bidding up the stock like the CEO of Netflix said. And they were concerned that too many people were bidding it up like they did in year 2003. That's what they did. They bid the stock all the way up there, and then it fell on the consumer that owned the stocks. And boy, oh boy, they got caught up at the highs. And it's doing it again right now on this weekly level. I'm going to blow up this piece of it to you now and let you know that one of the things that we'll be looking at going forward is where the 10-week simple moving average is. And that's at 307.53. That's that blue line. It's been rising. It's part of what a long-term rising price channel range to the upside looks like. Most importantly, the thing that you need to know is the following. Is the price volatility from overbought levels. We were so overbought right here. I mean, we were overbought. And when we were up there, we were higher than the 92% level, actually above 93. And the thing of it is this. We have showed where a lot of these high-flying stocks have these big corrections. That's where you get to make your money. Oh, yes. And that's a good thing to do. Now, the reason why we're looking at going long again is because this is part of a long-term bull trend cycle in play. That means that when the equity name comes down and tests those lower price support levels, then the option premium that I showed you is going to come down in value, and you're going to make a lot of money at the end of the day. So, once again, the Amazon is a trade that can work for you if you want to get involved in the Amazon trade along with Netflix. You can do them both. I have the Amazon chart over here, but it had a big gap. I'm not going to go into that totally with you, but you could do the two trades together, meaning that you could get long Netflix off of the bottom. And because the Amazon, you could throw that in here as a pair trade that we can do with you. And we would love to do it with you. And it would be based on gap open ups. That earnings play like Netflix. Not going to have the same outcome that Netflix had, but it's an overbought. So from the overbought levels like Netflix was into the earnings, they're going to come down. You will go up higher, but each high will be met with resistance. So you can buy puts up here, and you can buy calls at support on Netflix over there. That way you're diversifying your actual risk. Okay? Here is a Netflix 330 put that I wanted to show people. This was November, regular 330 put on a 60-minute level. I will show you what it looks like on a daily. Okay? And remember, MMTs, that the puts were buyable at 250 here at one time, and they went straight up here. The low was $1.34 and the high. Now remember that this date was 2013 on 10/22. And look what happened. So when that stock had that super gap and it was way up here, they took these put options all the way down here to $1.34, sold Netflix off, and if you had, let's say you only had 10 contracts, they went as high as 23.74. Say you sold only at $20 and you got in at $2. You made $18,000 on only 10 contracts. However, when you're working in the option pit and you're going to buy deflated puts based on a gap open up on a weekly level, here's what that gap open up looks like right up here. Okay, and I showed you where the puts were. So the minute that price went down, that 330 put in $1.34 and went right up to $23. That's what you're going to learn here. Once again, the 320 call, the 310 calls, they come into play on Netflix at support. Based on the daily chart, with that big sell off and coming down and testing support, we're going to look at the 310 and the 320 calls in the money, and we're going to look at getting wholesale. Here's that weekly collapse in the price on Netflix. Now, let me just tell everyone here at the end of this, there's a lot of stocks like this right now that are going to do the same thing. I just want you to know. So whether it's Netflix or Amazon getting overbought or MasterCard or a lot of high-flying stocks, their bull trends are extended and they're going to have pullbacks.